Hey everybody, Lee Gettess here with the Market Sense for the week of August 4th, 2015. We're going to stare at some charts that come from the Trade Navigator software, just like always. And this is a weekly bond market chart, which has really had a nice rounding bottom and took off pretty good to the upside here. They have already reached the upside target. That projected high is 157.20, which they've already exceeded and backed off from. The support, if they want to continue to trend up, is all the way down at 154.22, and that's, wow, it's 2 full points away from where they are now. It's still quite a drop. However, we are going into 3 days of employment reports, culminating with Friday's big monthly report. So, heck, you can't rule out seeing them down here in the 153.10 area at the middle moving average, or even blowing up higher. I have a calculation up here at 159.16. You'll just have to trust me. I can't show it to you, but it's on a monthly chart. But 59.16, 53.10, both of those things are possible. But I've learned not to sell short the monthly employment report because anything can happen. I've also learned I'm not very good at predicting what they're going to do based on it. In stocks, quite the opposite situation. Nothing's happening. You could have just diddle marked for the entire year. Nothing's happening. Nothing's going on. The volatility's down. They can't seem to do anything. We've got resistance up here around 2118. We've got support, let's call it the 2060 area down here. And instead they're just kind of playing either side of 2092 and not really doing anything. Look, when you have a big sideways pattern like this, the most likely thing for them to do is to make a false break of one side or the other and then turn and go the other way. They did make a new high here, but it's one tick. I mean, literally 0.25 of a point. That's how much of a false breakout to the upside that was. Don't like that. Not really liking that too much. It would be wonderful if they would take out this old low down here. It would be even better if they would go down to the 1950 area and take out these lows. Everybody would be convinced that they were going to zero at that point, and that'd be a great time for them to turn back to new highs. That's how markets have behaved over time. But this year, they're just not doing anything, and it's driving me freaking nuts. So maybe the employment report will kick them out this week. It's been several months we've thought that way and left unfulfilled, so we'll just have to see what happens. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.